My name is Jan ten Haagen. I'm the CEO and founder of ten Haagen Financial Group. We were established in 1993. We work with individuals and small to mid-sized corporations on their personal and their qualified plans. We implement them and oversee them. I have many years in the financial markets. I have learned how to guide people through the emotional ups and downs by putting logic back into the equation. I am your portfolio investment repairman. In just 30 minutes, I can show you how my expertise can help you on the path to financial investing success. Please sit back and take a few minutes to learn about ten Haagen Financial Services through some interviews that I've done.
We all know that being proactive can really pay off. So tonight, some on-the-money advice you're going to want to act on now before things get hectic around the holidays and you just don't have the time. Joining me, Jan ten Haagen, certified financial planner and founder of the ten Haagen Financial Group, which is based in Huntington. The interest on mortgages is down in numbers that we haven't seen ever, I don't think.
Yeah, it's historically low. If you haven't refinanced, you should really take a look at that. But also, how long do you plan to stay in that house?
Right.
If you're going to be there 2 or 3, 4, 5 years, it's really not worth it. But if you're going to be there 5 or 10 years or more, then it strongly makes sense. Start with a budget and a balance sheet. In other words, what money is coming in, what's going out, what are my bills, and what do I have left over? And when you do that, take a look at what you're spending. If you're paying for your insurance quarterly, you're paying an extra fee each quarter. So you might want to try and pay it on an annual basis. There's a little money you can save. Everyone says, oh, I can't invest. I don't have the money.
Right.
Well, that's hogwash. If you can find $12.50 a week, you can invest. In a 401k, rather, you've only got so many choices. In an IRA, you've got the world to go to. So my suggestion is roll it into your personal IRA and then choose where you want to have it invested going forward.
Jan ten Haagen has been a financial planner for over 30 years. At times like this, when the market fluctuates dramatically, he urges his clients to turn off the TV and focus on the big, long-term picture.
You're not investing for today or next week. You're investing for your retirement.
You may be tempted to bail and pull out your money, but ten Haagen says now is not the time. If you do, it will be harder to recover and make your money back.
That's when you should be getting more money in, because there's a bargain out there. Find out who's being recommended to you.
Okay,
right? Because if you're close to retirement, you want to be very, very conservative,
Right.
and the other person is younger and they're going through commodities, futures, and all kinds of crazy market gyrations, maybe you don't want to work with that person.
So make sure the person that you choose is somebody who works with other people who have your financial situation and background.
Yeah, you got to ask the questions.
Yeah.
It's your money, and bottom line is you're responsible for it. So make sure you're getting the right person to put that money to work for you. Ask yourself, here's what I own. If I didn't own it today, would I buy it? And if not, sell it, even though it's a loss, and position it where you think the market is going to be better going forward. You should be rebalancing on a periodic basis. If something gets more than 5% out of whack from what you originally structured it as, reevaluate and maybe take some of the gain and put it into one of the ones that hasn't performed as well. You know that interest rates are going to go up, so things are going to cost people more money, no matter whether it's a car loan or a mortgage, and can they even get a mortgage? Some people are saying it could be like Lehman in 2008, where the credits just froze and there was no money for corporations to borrow short term to pay their employees. Let's hope it doesn't get to that. At 2.5%, your money's going to double in 28.8 years.
Oh my.
So if that's a double, you're what age now? When do you want to retire? How many doubles do you have left? And can it double enough to get there? If you look at 7.5%, that's about 3 times that. So in 28.8 years, your 100 becomes 2, becomes 4, becomes 8. That's a heck of a difference towards retirement. You should be seriously looking at it, because if you liked it at the top and you're buying something at $50 a share, now it's 25. It's a sale going on. Where are all those people that were day trading in the 90s?
That's right.
I don't see any anymore.
Yeah.
So that's not the way to do it for the long term. Thank you for taking the time to watch this short video. I hope you've learned something or heard something that will help you with your financial goals. My goal is to identify your needs and goals and to make sure your investments work for you. Remember, I am your investment portfolio repairman.